Sunday. Welcome on into today's stream. We're going to be covering a bunch of stocks to keep on your radar for this upcoming week. We are about to enter into the first trading days of December later on in this week. We'll have that changeover around midweek. But I want to do first is look at futures, cover the overall market updates, like give us a good picture to kind of base off of. And then we'll dive into the watch list. I've got a bunch of stuff I'm pulling up as we speak right now on my list for a couple different breakout potential trades, although that is a sketchy trade right now because, again, we're waiting for a true confirmation of the S&P to break out. So I think what the play would be for some of these names if we do end up getting rejected by the S&P or this overall market's rejected in the coming weeks, we're looking at some potential false breakouts, which provide awesome opportunities. We just got to be prepared for them. So just don't want to be, too bullish or bearish biased off the go, because at the end of the day, right, we've talked about it last week, which we'll walk through that thought process into this week or right now. As the potential, risk if you want to get overly bearish or if you want to get overly bullish, as we speak right now. Intraday, fine, but bigger pictures, that's where things get a little bit sketchy because we're up to a pretty crucial spot, which we're waiting for confirmation of a breakout or rejection, and we really haven't gotten either. We definitely have not gotten either one of those across the overall markets. Right now, we're looking at futures from the past couple of days, which yes, we are kind of rejecting off of this area that we could not break out last week on Wednesday and then Friday because Thursday markets were closed, but not much. I mean, the S&P or the futures right now are down 0.37%. It's not that bad. So again, it's nothing like huge. NASDAQ, futures are down 0.43. Russell futures are down 0.4%. So there's nothing like super, super crazy across the board. Take a look at this. Here's Bitcoin futures. They're down 0.6. Again, nothing crazy. Not moving too much. Here's the big picture Bitcoin futures chart right here. We can pull up Bitcoin, but we got the futures pulled up here. So we're looking at this area right up in here, which happens to be just from about like 16.5 to about 17,000 on Bitcoin. That's going to be kind of your crucial spot. You're looking for, a break and hold above that for upside, or this is going to be your rejection. That's going to be you're looking at that as supply and resistance if that cannot hold or that cannot break. So that's kind of where we're kind of sitting at on Bitcoin, although this pattern after that big move down doesn't look great. These generally tend to coil up for bigger moves down, bear flag or whatever, but we can't assume that it's going to bear flag, even though the news has not been great across Bitcoin. What if we do this, right? Are you going to hold that short the whole way, or are you going to add that short? You could be bleeding big time if that's the case, and you're wrong. So keep an eye on that. Okay, that was the deal there. We talked about. I don't really want to dive too deep into small caps. It hasn't. There isn't a need, and like I said before. The problem with small caps, and just this is individual small caps. The overall, we can look at, the Russell, right? Here's the Russell. I'll pull up IWM. The overall Russell doesn't look too shabby, right? It's been kind of building these higher lows. This could easily break down and provide off some backside here at any time. But the overall Russell is one thing, individual small caps are another, and they just haven't been very strong. A lot of stuff is sitting towards lows. A lot of stuff is just kind of bleeding out, and that can continue. Selectively, there has been some attention and there's been some volume, but big picture, it's still just not super hot, although we are coming into a time of year where things tend to heat up, so we'll see if we get any more action there. But when things do, as we've said before, and I don't think that there's any reason to change this thought process, there will be a million stocks to choose from. There will be so many to choose from. It's not going to be a huge deal. Here comes our guest appearance from George as he's sneaking on in. He's sneaking right through. But with that said, I want to kind of cover the overall market. Hope everyone is doing well, and we'll go from there. What's up, guys? What's up? S&P at critical moments. Yeah, it definitely is. It definitely is. So with that said, let's talk about it. Let's go to SPY. I got rid of a bunch of my lines outside of this big trend line and on my two indicators that I keep on the daily charts, just because keeping it clean is kind of how I like to look at it, right? So we pretty much finished flat on Friday. We had a lot of wonkiness. You jump back to Friday, not wonkiness, but you had a lot of like little up and down, but very small range. We had a very, very tight range on Friday. We talked about this. It was like a less than $1.50 range, which is like unheard of this year on SPY, which is like, if you do the math about percentage from lows to highs of the day, a 0.3% range, like, come on, that is like abysmal price action, but it was a short day, low volume, holiday time, no big deal. Now we got that out the way. So now you got a couple of weeks, about 2.5 weeks until the next big catalyst. And that's going to be the CPI on December 13th and then the Fed on December 14th, FOMC. So those are your next two catalysts. And speaking of FOMC, let's see if I can pull up the current projections for this next Fed rate hike, which is 16 days out. So a little over 2 weeks out as we speak. And hey, it looks like a 50 basis point hike is where the market's pricing things in as of right now. This very likely will probably change. Very likely will probably sounds like I'm saying too much of the same thing, but very likely will change going into the next 2 weeks. But then the CPI the day before could alter this in a substantial way, right? I don't think we're talking 25 basis point hike. I don't think so. But the question will really be 50, 75, most likely here. I really, even if CPI came in super low, I still don't think the Fed will do a 25. They'll say, okay, we'll do a 50, and maybe the 25 comes in the February meeting. You know what I mean? Something like that. I don't know if the trend continues, right? So that's just my take on that. I think we're dealing, again, with a 50 or a 75 at the next FOMC. And then you're probably going to have Powell do the same thing and try to walk the markets down. Because if the market keeps going from here, right, on here, let's go back to SPY. If the markets keep kind of pushing up from here, big time breakout of this trend potentially, right, looming, right? If the market does break higher, that's not going to bode well. Right? That's not what they want. They don't want that to happen. They want things lower. They want, maybe the S&P sub 350, the S&P, sub 370, hold it down there for, next 6-12 months. And then, we can kind of be a nice reset. Things will reset up. And we can kind of resume more of the healthy, sustained moves up in their view, potentially. We'll see. Okay, so big picture, right? This big circle is where everyone's like, oh my gosh, what's going to happen here? We're getting ready for a technical, rejection / breakout. This is where I think a lot of people are going to get burnt on both sides, because again, who cares which way we go, right? Realistically, because at the end of the day, right, you can be you have your long-term view and long-term holdings, and who cares, right? It doesn't matter. This is going to be hyped up as like a pretty key spot, and we'll hype it up, and it's like, okay, it's really cool, but at the end of the day, it only matters if you're looking to trade off of it. It doesn't really matter in the long term. Like 5 years from now, this rejection or this breakout, who cares, right? But this could signal the next substantial move in the next couple of months if it does line up with, maybe a move from the Fed or a move in CPI that is continuation to the downside, or a CPI that remains hot. This is going to probably, act as a good rejection point right now. And then you have to factor in the recession factors. You have to factor in the job market fears that we're going to have going into next year, which is going to be your next big player, which I think that's more important than talking about CPI at this point in time. I don't think who cares about CPI, right? I mean, it's important, but that inflation trade is, in my view, going to lose some steam. It's really going to lose a lot of steam, and the true drivers are going to be now we're looking deeper into the economy, looking at recession, looking at concerns about potentially, dare we say, deflation, and what that actually means for companies, for businesses going forward. Retailers, how do retailers do through the holiday season? Is there opportunities shorting Walmart? Are there opportunities to short some retailers if things are really bad because people are like, I'm not buying jack, you know what I mean, compared to what was projected or compared to what the demand was thought to be. Like, those are going to be, I think, your opportunities, your bigger picture opportunities going into next year, versus trying to play off the Fed and inflation. It's more of now, okay, what the Fed has done, what the Fed's done. We're getting closer and closer to the end of what the Fed's going to do. Okay, that cycle is pretty much done. It's now going to be what happens and what is the results of what the Fed has done. So that said, we're still going to probably have a few months to a few quarters where that takes time to digest. We all want it to happen right now, right? We all want it to go, oh, Fed just raised rates at one of the most aggressive, if not the most aggressive pace in all time. Guess what? We're going to have a horrible recession, and it's going to be like the worst thing ever. And we all want that to happen, or we all expect it to happen like right now and get our instant gratification of, oh, I was right, I predicted it, and boom, right? Guess what? It usually takes a lot longer to play out than you think. So that's why I think, first quarter next year, but second quarter and beyond starts to get, a little bit interesting in terms of earnings, and to see how the job market's holding up at that point, and then how the market starts to react and see where the market's or how the market's moving from there. Because we saw the past like month and a half, we've been seeing this not slight, but a bigger disconnect between how the market's been trading, how bond yields have been trading, and how the dollar's been trading. Generally speaking, what we've seen is that when bond yields go up, the stock market goes down. When bond yields come down this year, the stock market goes up. When the US dollar goes up, the stock market goes down. That's generally what we've been seeing. We didn't see as strong of a connection, as strong as of late, although the connection is still there. It hasn't been as strong the past couple months, but again, it has still been there. So let's see if we start to lose that connection, right? And we start trading, or we can start tracking along with something else that might make a little bit more sense, or that might be a little bit of a tighter correlation in terms of an inverse, or, whatever in terms of the market. But long story short, this is the spot, right? So we're coming up to that 200 moving average, coming up to trendline resistance. We have, again, 16 days until the next Fed meeting, about almost 17. So you got about 2 weeks and a half, right? 2.5 weeks until this. I say you got 2 weeks of potential move. You've got 2 weeks of a potential move here, and I wouldn't be surprised. There's some choppiness. There's going to be some rejections. There's some scariness here. If there's any outlier news, market related, that is going to that could affect things, then that's huge as well. That could certainly impact things that we don't see coming right now, right? Before Powell and the Fed and the CPI comes out, they're going to have people talking and stuff. But for example, you go to this week's economic calendar and you look down towards the bottom, or you look down towards Wednesday, and Powell is speaking on Wednesday. Now, do we expect him to say anything massive? Probably not. But if Powell says something kind of crazy at this meeting or whatever, at his speaking event, that could drive the market, and that could be the next kind of short-term move before the ultimate data drives us come, that mid-December timeframe. So if we start to break out above this, you have the potential for a false breakout. Don't get too, I really wouldn't get too, excited or too happy or whatever, if that's how you feel. I don't really, whatever. If we start to break out over this trend line, you start thinking, oh my gosh, SPY's at 415, 420, all bets, we're going up, like here we go. If that happens prior to CPI and prior to the FOMC, I mean, those are your two biggest, catalysts that are just still waiting at the end of the tunnel, right? So you're not out of the woods. And if we start to break out here, pull back or whatever, and then those two catalysts are behind us, and we're sitting here December 20th, and SPY's over 420, now all of a sudden you're talking standard rally, dare I say, and you're talking about, hey, maybe CPI is coming down. Market has digested what the Fed has said pretty positively. We'll see what they end up saying, in 2.5 weeks. And then there's the potential for that continuation move of the breakout. But you got to get past that catalyst, in my opinion. And then, of course, if the market does not like what the Fed and Powell have to say and CPI, then there's your false breakout potential, and we could be headed right back down. And that could be a really juicy spot just above this trend line to go short, because it could pay pretty nice in the next couple of months. It could be a couple months, about a quarter or so in terms of downside. Depends upon the time frames and other catalysts. But of course, we saw what happened here, right? From highs to lows, let's just do the math, right? Of course, nothing works out perfectly here. But, from March, you had March 17th was your high, and then your low was back here on October 13th. So you had, August, sorry, I'm not saying March. August to October, you had 2 months. So maybe if we have a high, let's just say December 10th, something like that, you could be looking out to February, as your potential next, look, if the same time frame plays out. So again, think a couple months for these cycles to kind of these ebbs and flows to play out. We all want it to happen right now. We all want the instant gratification, but it doesn't happen that way when you got to look at the big picture. So if you want new lows, of course, we can get some crazy news and drop to new lows, right? If some massive, horrible thing happens, right? I guess pretty fast. But generally speaking, we're probably about 1 to 2 plus months away from new lows, if we're going to keep the same general pace, because we've had a pretty big reversal, at least on the S&P off the lows. You look at the NASDAQ, you look at QQQ, we're way closer. We can get down to new lows maybe a month or less from right now, depending upon how the price action plays out. So it depends on what you're looking at, but that's the big picture across the overall markets. And the Dow, really quick, I want to pull up the Dow. DIA, here's the Dow ETF, a very strong player. The question that I have is, if this continuation move up holds, do we see a catch-up in the NASDAQ and small caps against the Dow over the coming months, into the end of the year, into next year maybe? Or is this just going to be the new, the new age of investing and trading, where the Dow stock's the strongest because people are concerned about bankruptcies and how realistic the growth stories will remain across the tech names and all that stuff, and see valuations continue to weaken and to drop into next year. That's kind of where I think, the reason why this trade is stronger is because you got a lot of safer names, safer stocks, you would think, in the Dow versus in, the Qs or even in IWM, right? So big picture, that's what we're looking at. Now I want to dive into some charts and some stocks. We shall see, but that is the plan. I think the SPAC move will be hot following the GRND. Let's pull it up really quick. I think that there's a potential the thing is we have the possibility because we're into the end of the year. This is the time that especially, we also have to think about this, right? You have the tax loss harvesting period of time as well. So that could be playing a role into like what's weak will stay weak and maybe until like the second half of December into next year time frame. So that's something to keep in mind in the small cap space. So maybe it's I don't want to say slightly delayed, because generally speaking, we do see, small caps and whatever, and those momentum names heat up, after Thanksgiving or around Thanksgiving and going forward. We never really got a turkey runner. We had some decent moves. We didn't really get a turkey runner, that goes, 200, 300, 400% type of move around that, Wednesday to, Tuesday, or really that Monday to Friday Thanksgiving week time. Which doesn't always happen, but it's generally a time where we start seeing some action there. It hasn't happened. Doesn't mean that, small caps are necessarily dead. But this is a time I think that we're going to be looking at into the end of this year. I like the potential. I really do, but I want to see more continuation in terms of other names, and other stuff popping off. And I want to see continuous, every day there's 100% gainer for like a week or two. And then we can get more excited about, the momentum in small cap trades. But we kind of haven't had that. Maybe this is a better reset here now post holiday. People are starting to say, okay, it's time. But the reasoning why, a big chunk of the reasoning why you see some good action to the end of the year and beginning of next year in small caps and these crazy pumps, is because a lot of funds, a lot of big money is sitting here like, hey, like how do we finish our year strong, pad our sheets and pad our numbers, especially during a bad year. You could get some explosive moves, not to mention there's stuff that's just like bottomed out. A lot of these small cap names could go 200, 300, 400% and be absolutely nowhere even remotely close to like their trading ranges of 2020 and 2021. You know what I mean? So like that's the type of things you can be looking at across small caps, and then to start the next year on a good note, you can kind of get some good action there. So we'll see if we get any of that stuff. But that's somewhat of the reasoning why that we tend to see a hot finish and a hot start to the year. So hope that somewhat makes some sense. Peach Bum's in the house. Anthony thinks we're going to open red tomorrow. Want Tesla's back to 170s. Let's see where Tesla's at. Let's start diving through some stocks here, and because I do have a couple on my list, and I have my usual watches we can touch. Tesla here, 180 key. So 180. I'll extend this box. 180 is your key spot first. You got to break 180 first. But if you break 180, then you're opening the door for the 170s to be in play for sure. But let's see the big picture on Tesla. Big picture. Zoom this bad boy out. Go to the weekly chart, right? What do you got? A potential, right? A potential, I say. Head and shoulders pattern that's playing out right now on Tesla. How much more downside is there left in the tank? I guess the market's probably going to have a decent say in that. But also you got to think too, like I was saying before, a little bit of tax loss harvesting here, especially on the stocks that you go back to how they did this year, and you might want to a lot of people are looking to say, hey, I'm going to realize the gains or realize the losses here, write it off on my taxes, and then I'll enter back into the start of next year or late this year or whatever the time is, 30 days, 31 days, whatever the amount of time it is that you have to technically be out. So on the weekly, we got a little bit of a nice reversal candle there. We got a nice potential indicator support right here at like 161. It lines up pretty close with the highs, the prior resistance levels back from 2020. So that 160 to 165 is going to be pretty crucial. I think we were looking at 167.50, which was the spot pretty much from this last week. That was their support. We have a descending wedge right here as well. If this is a false breakout, again, we tried to kind of break out to finish the week. We'll see what happens. If 180 can't hold and we start falling back, that does not look good. But if 180 holds on Tesla, we could be looking up to $200. So don't get, I wouldn't jump the gun necessarily, because that's a descending wedge and it could be a possible upside play. And these tend to be pretty aggressive if the pattern holds. Big if. That was already broken out of the descending resistance. SPY, yes, SPY, NAS are lacking the Dow for sure, as we speak right now. Deflation and recession effects are the new risks. Yeah, and I think that the problem with that is like not problem, but I guess is that they could take a little bit more. They're going to take more time to like actually play out because right now you look around. I've been just kind of gauging some interest on Twitter and just gauging interest across social media to see what people are thinking, right? Whether it's analysts and whatever, and you got a lot of people who are not a massive amount. Obviously, I think that still the majority is looking for a short opportunity coming up here across the market. But I think I've been seeing there are some who are still in the camp that we're not going to have a bad recession next year, and we're going to kind of the Fed's going to thread the needle here, and we're going to be fine. And fair enough, like you can think that because I guess right there's still not necessarily a ton of confirmation yet, right? GDP, like all this stuff yet that we're there. But I think a lot of people are looking over the hump and saying, hey, this is going to get bad next year because X, Y, Z, because look at this, this, and this. Look at what the Fed's done. Well, you're seeing it already here. You're seeing it here. Look at what your massive deflation in this and that. You're starting to see that across other indicators. And so that's kind of the thought. But there's still a camp for sure that does think that we can, avoid this recession. And maybe squeak out with a small one, but there's a camp that thinks we can avoid it, and that's needs to get played through. And if we do, great. Market will probably like that, and we could be back not at all-time highs immediately, but we could kind of grinding back up and be at all-time highs at some point late next year, maybe, who knows, or even before that, for all we care. Or you got the market melt-up theory, right? Who was like, oh, we're going to have a massive melt-up, ripping rally into early next year and then have a destructive crash or, whatever the time frame, and have a destructive crash and drop by, 75, 80, 90%. Who knows? There's a lot of theories out there for sure. That's pretty wild. And, I like to keep an open mind. So if we saw that would be nuts. I would be like, that would just be like incredible opportunity in front of us for upside plays, and then of course the massive downside that we're going to have. And then I think if that ended up happening, a lot of us would have potentially, a life-changing opportunity potentially at some point when the dust settles. But these are all just theories that you kind of come across when you start gauging sentiment and thoughts on social media from analysts and whatever, market veterans and stuff. But everyone's got a theory. NAMS, NAMS, popped a little bit. Let's take a look at NAMS. And then EUD had a quick spike and fall at the open on Friday. Yeah, stuff I was looking on Friday, like things like had a tough time getting any strength. This thing had a nice pop, a quick pump, and then a dump, but right back into the level. So we'll see if it wants to hold this or if it's going to break right back down. Had a nice little, someone caught the dip there on under 10 so far as we're getting bought up. We'll see if that 10 area ends up handling, but looks like this is going to be your spot to see. Yeah, turning lower on those wicks, but crazy pump shows potential across some of these things. Any ideas for any good stocks to sell some cash secured puts? Yeah, let's go through some names. I want to go through the list. We can look at some other, cheaper names too, but let's start with this list here. Let's go through the large cap list that I have. Then I have a couple other ones that are not on my list, my usual kind of, trading list, and then we can kind of dive deeper. So there's Tesla. Tesla we could easily break down, go more. I'm not super interested in that. It's really volatile, so not a big fan. Not really a big fan of Apple either for selling puts. Again, sure, maybe the bottom's in. Maybe this is a good opportunity. You're going to catch it low. But again, I would have liked it to be down a lot more before I want to be selling puts. Zooming this out, NVIDIA, not really. I would want to be looking at stuff that's at lows or getting close to lows. So you might have to get down to the small cap names or the smaller caps, mid caps, and stuff like that. I'm not really sure about AMD and Amazon. Maybe Amazon's an idea. Concerns about maybe into next year with some of the retail names, and if we do go into a deeper recession, you're seeing even the big CEOs of companies, like even Jeff Bezos saying, hey, stack cash, don't buy that TV, whatever they're saying. So if that's the case, you might have, you definitely have potential downside risks here below $80 on Amazon if that happens. And if we do have a pretty nasty recession and, the consumer gets crushed and no one's buying jack, although Amazon has a ton of revenue coming from AWS. So there's a lot of other aspects here to diversify it. But my thought on Amazon is kind of similar. Of course, it's pretty expensive from a PE ratio and whatever. But the lower this thing goes, the more interested I'm in. And I don't really necessarily care about, the short-term price action on Amazon. It's more so, hey, we were down from highs. Let's see. We're down 50% from highs. Great. Could it go another 50% from here? Oh, yeah. Right. But now you've got a much better deal than buying this thing within, a few percent of all-time highs. And so that's an opportunity or an idea. Cheaper, I guess, relative because, hey, it's come down under $100 after the splits and stuff. These things get a little bit cheaper. Microsoft, kind of the same thing, although I would like Microsoft a little bit lower, closer to like sub 200 ideally, but we may not get that, at least right now. Microsoft at a key spot. It's up at a nice area that was support, turn, resistance. It's this box, and it's a pretty wide box. But until Microsoft gets over 250, I would lean short on this. Again, until it breaks over and holds over 250, that's a long. But until then, it's close. Until then, not really super interested in playing that long for now. Google, kind of the same thing. Google, I think your opportunity has passed for now in the short term. Selling puts on Google, when it was dropping below $90 would have been juicy AF, but now you're not getting that. I mean, you're looking, I would say, hey, this is an opportunity, kind of like an Amazon in my view. If this thing, continues to go lower, you've got a nice price cut from all-time highs of, 30, not as much as Amazon, about 30, 40%. Hey, could it drop another 50? Yep. But I like my, my opportunity here relative, obviously, to the, 6, 7, 8 months ago. Okay, let's go to some risk on names, and we'll cover some of the names like that we're looking at for potential setups for this week. This is interesting. Affirm. I'm really not bullish really, but I'm really interested to see what happens with Affirm. The buy now, pay later. People are doing this stuff, right? Especially now. What happens as you're seeing credit card debt and debt just skyrocketing in the fastest pace of like all time or something crazy? Like these stats are nuts that I'm seeing in terms of debt. So yes, these companies technically are I guess could be doing good because, people are using them more because, they don't actually have their money. But if they don't have the money, that's still not a good thing. So what happens on the backside of this recession if we do fully confirm into next year and whatever and all that stuff, and how bad is it? What happens on the backside of that with stocks and with companies like Affirm? Concerning because, hey, just like anything else, if people just can't pay and they're like, hey, I'm just not going to pay because I can't. Like, they don't care. It doesn't matter, right? So, what's going to happen? People don't care. What's going to happen to some of these names? And it doesn't look good, right? Earnings-wise, it didn't look the best. So, concerns there. ARK, unless you if you're really into the tech name, here's the thing with ARK, right? I think you're going to see this is a product, a lot of a potential big-time product of tax loss harvesting, in a big way. Am I super bullish on Cathie Wood and her stocks right now? Not necessarily, although if you do like the tech names and you do like the names that she has in there, and I'm not a big problem I have is I'm not a big fan of all of them. I like a couple of them. I'm not a big fan of all of them. And I like the Roku in there. I just like how heavy of a weight. Let me just see if I can find the weights. Cathie Wood stocks is a list of, I think, her ETFs, holdings and stuff. Zoom is a top one. I'm not like a big fan of that, but I'm also not I'm not terrible because that's where we're going and that's where we are. We've gone that way and that's not going anywhere. I would think we have to watch and be more closely looking at Zoom earnings, but it's not going anywhere. Tesla also I don't think is going anywhere. Roku, I don't like this one as much. If Roku was out of the top 5, out of the top 10, maybe I'm more interested in that, but I'm not a big fan of that. I think Block gets interesting now as Bitcoin's getting crushed, like now gets interesting. Shopify, maybe now after getting destroyed, but it's still pretty expensive from what I've seen. Teladoc has been annihilated. Like now, like some of these stocks like interest me now. The problem was that they were held the entire way down through all these rate hikes, which at the end of the day is not a massive deal if these all end up, or if not all of them, they're all going to be. But if a good handful of these do become true winners in 5-10 years, like the grand scheme, it doesn't matter. Like Unity software could be an awesome opportunity. Metaverse, if that does pan out anyway. Roblox potentially there as well. So like some of these names could be good opportunities, but there's a lot of names in here that, number one, I don't know enough, and number two, I'm not a massive fan. So it's like, do you want to buy ARK? Like, yeah, you can look at ARK. I like to look at it as to give me a good feel for like, hey, what's going on? Are we risk on today? If ARK is up a lot, and if ARK is up 2% and SPY's up, 0.5, seems like we're pretty risk on, because a lot of her stocks are risk on stocks, right? They're more risky names, and they get sold when times are tough and people are concerned, and they get bought up and everyone's feeling good, right? So that's kind of the deal. So a product of tax loss harvesting, I'm going to imagine a little bit here as well. Her stocks and the ETF, I'm going to assume that you're going to have some of that factored in there, but like, I think you can probably do better with other stocks and building out your own list or your own collection. If you like her list as an idea, pick 5-10 names on this list and build out your own little build your own little portfolio. You know what I mean? I don't know. So that's just my take on it. But that's the deal. So we're gonna cover some more of these names into tomorrow or this week. But we're setting up for some interesting opportunities. AMD, we can cover AMD in a second. I'll pull up futures really quick. Let's check back in on futures. How are they holding up? They're not really holding up. They're coming down, but not that bad. Futures are looking right now like they are down 0.43% on the S&P futures. NASDAQ futures are down 0.56. Russell's down 0.44. So we're pushing new lows on the session roughly right now on futures, but we're still, again, from the highs of last week, let's just do the math. How far off? We're down 0.85%. It's not that much. It's really not. So you expect pullbacks, and we're getting up to some resistance points. So maybe we start pulling back a little bit ahead of time. I wouldn't be surprised. It doesn't really seem unrealistic to think, right? Affirm buy now, pay never. Yeah. Yes. That's kind of how it seems. FPay. Lease to own, like an online renter. Yeah, you know what? I was looking. I think I saw a company recently like that. I forget where it was, but it reminds me of this. Flex Shopper. Let's take a look at this bad boy. Trying to hold a little low here at like just under $1. Interesting. Got some gaps up to about 140, maybe up to $2 could be the next spot to look at resistance-wise. Interesting little chart. You want to see it holding around $1 though. Now, ideally, you don't want to see it dropping below $1. If it does that, then you're probably looking at a breakdown potential down into these lows into the 80s. I would think. Okay, so let's talk about some of the looks that I have, or at least the stocks that have been on my list for potential bigger moves into the next week or two. Here's one: Enphase. Whether the market is strong, I guess. Market's strong or weak, Enphase doesn't really seem to care. Obviously, the market's down. You're going to see some weakness. Enphase into early October was pulling back, right? But Enphase ended up hitting all-time highs in early September when the market hit its little, I guess, short-term high back in August 16th, August 15th, August 16th. So this has been a super strong name, and they've been doing pretty well in terms of their earnings from what I have seen. So we're coming up on resistance. About 325 is going to be 324.84 is your all-time high. So 325, essentially, psychological whole number, is your trigger. I have a couple triggers set up in terms of alerts, but over 325, you've got opportunity for a nice push to the upside for an all-time high breakout. We start to break back down. I have a small position here. Nothing big, but if I did not want to add to that or play it into this week, maybe I would add to it. Under 310, I don't like it. Not a fan. And under 305, under 300. And then I'm like, oh, this is looking pretty bad. And then we might have a really nice downside play setting up for a couple of days or for a couple intraday sessions. We'll have to gauge that going forward, but that's the look. So if we break down below this wedge, which we kind of have this rising wedge, I'm concerned. I'm not a massive fan of playing these breakouts, although the stock has been super freaking strong. And how many times are we now testing the same resistance? At some point, you're going to break through the more times you test these levels. So that's the thing. I'm looking at this and saying to myself the same thing of, in a perfect world, we get a breakout. This thing makes, a 10, 20, 30 point move in a day or two. Great. And then it has a false breakout. Stock market rejects at that key resistance level. And then we get to play both ways. Maybe in the perfect world. But again, it's been super strong. So don't want to say, hey, this has to come down. It's been strong, and that could last a lot longer than you think sometimes. So that's one. There's a couple other charts that look similar. There's a lot of stocks that do look similar. First one is Hyatt Hotels. Check this out. I haven't been too focused on the hotel space, but look at this. Hyatt's coming up not to highs of the past year. Got 108 or so is the highs, but it's getting up there. So we got really strong higher lows being built up into resistance. Like, this is a good opportunity for a short until proven otherwise. So Hyatt's coming up here. If this thing gets over $98, I would say I'm not looking to play short this guy. But as long as 98 holds as resistance, we could get an opportunity for a nice downside gut check here on this move up, because we've been slowly kind of building these higher lows and slowly pushing up into these levels. Again, what we're looking at right now is a bunch of wicks that have gotten up to this 97 to like 98, but the past couple of weeks, really since November began, we have lower highs on these wicks. So what I would say for tomorrow is I would say, okay, if this thing breaks above 97.50, not a huge fan. Let's see how it reacts there. It could obviously give us a wick above and then start to push back down, and then that could be an opportunity to play it short as it starts to reject. But not a humongous fan, especially if it builds over that 97.50 for a short. That's when you want to be looking long on Hyatt. So this could be a good opportunity here if this thing gets going. Not to mention over 97.98. Check this out. Volume-wise, there has not been too much volume above that level the past year. So we start to get into some open waters, as you could say, if it gets going. So there's kind of a point where, do I care about which direction it is? No, but we're getting up to a spot where we could get a pretty good reaction up or down. Let's wait for it to tell us kind of what it wants to do. And so that's my thoughts. Again, cautious on longs until the overall market confirms a breakout of the trend, but there's been stocks that have been stronger than others along the past couple months that we can play off of. ET, check this out. We looked at ET a while back, but I think they had some good insider buying. If I'm not mistaken, let me go to FinViz really quick and just double check this insider buying, because I'm pretty sure the reason why I found it was because of insider buying. Energy Transfer. I believe they have ties to Nat Gas, which is why I was looking at them. And then Nat Gas has been doing pretty well. Yeah, here we go. We got executive chairman, former CFO. We got some good buys in the month of November, up in the low to mid $12 range. So back to ET, the stock is sitting up here at $12.36, kind of right in line with those buys. Highs of the year are at, looks like $12.95. It kind of keeps on building these higher lows, and it's right now trying to break out over some of these levels of resistance. So ideally what you want to see, though, is Nat Gas and ideally oil pushing up. The problem I think is that oil does not look good. Here's oil's daily chart. Oil does not look great, so oil is going to be weakness to the downside. My thought is oil is coming to like 71 in the near term. That's like your next volume, key volume spot, 71, 72. But Nat Gas has been strong. So Nat Gas hit up to over 8 last week, pulled back. Now we want to see if Nat Gas holds over 7. That was kind of your highs up there in here. That was your resistance point the past couple of months, not really since like September, October. So let's see if Nat Gas holds this $7 area. I probably can just draw a box, make it easier. Let's see if Nat Gas holds this zone. Holds this zone right here. That was a prior resistance as support. If it does, great. If Nat Gas stays over 7, then the longs on that I like for upside on that. We'll see. So I think your inverse or cold was like your inverse. So cold would be a short, right? If you were looking at this, you look at cold puts, kind because this goes up when nat gas goes down, and this goes down when nat gas goes up. So I would just say, hey, I'll leave it on my list. As long as nat gas holds 7, we're looking at cold for puts, right, or something like that. Or you can play the other ETF on nat gas as well. I'm writing down puts as long as nat gas above $7. That's my note for that. So, all right. So nat gas is up a little bit in the, I guess, early session here, but oil is down. So oil's been super weak, which has been pretty disappointing, I guess, for the oil long trade. I haven't been in it, but I mean, you got a lot of people. You go back to oil, guys. I mean, you go and look around. Like, people were bullish as freaking hell on oil right here, saying, yeah, but oil, little by little, just slowly but surely, is going to start pushing back up. And guess what? It's got rejected every single time at 93, double top, and it's breaking down. And very good chance to hit new lows on the year, or not on the year, new lows on the past, 6 months, and be down in the low 70s very, very soon. That's just what the chart's telling us, and it looks weak as hell. Not to mention China with the lockdowns, and China's got a whole, shit show going on. So, that's potentially playing a decent role, at least for now. We'll see. Waiting to buy Wing. Dang, let's take a look at Wing. I haven't checked on this guy in a couple of days, at least a couple of weeks. Yeah, she's looking pretty strong, man. But there's this glaring gap just has me concerned. Like you fill this gap and then maybe you got a much better buy. Just chasing it up here, it just hit resistance and fell off. Like, yeah, could it break out? Like at some point, market strong, yeah, but we'll see. Hot take: Tesla trades below $100 in a year. That would be crazy. That would be crazy. But I could see it. The market needs to reject at these levels, right? Obviously, but if so, I would imagine you're going to still see weakness here in Tesla because you got that head and shoulders pattern, big picture, and under 165 or so. What's the number? I think around that level. Not looking great on Tesla. You start breaking down below 150, 140s. You start falling off a cliff, it seems like. But that would be a lot in a very short period of time. So that's obviously a hot take, right? But, I could potentially see that. It's come down in the past couple of, really since late September. In 2 months, the thing fell from 310 to, got cut in half, essentially. From these highs right here, that right shoulder, it fell almost 50%. From the all-time highs, you're looking at a drop of about 60%. So could it do it again? Yeah. It totally could. Totally could. I want to see how this reaction is at this trend line. I don't want to have a bias. I don't have like a, reason to be in, like, I'm not looking at SPY calls for March. Like, I don't have any of those. I don't really care. Because if we reject, we reject. But my my speculation is that if things align, I could see the potential of this breakout happening and giving us a technical move to the upside, potentially supported by some CPIs and I don't really want to say the Fed, but maybe the Fed backing off if CPIs continue to come down enough. Just my speculation. Again, a lot of people are loaded puts, like we've been saying, bears. I think a gut check there would be a better short opportunity in my view if we get that. So if we start to do this, and then I'm looking around and we got a lot of signals that were signaling, the downside back in August are kind of popping back up again, then I'm like, okay, now here comes a pretty good opportunity to go short, or potentially now here's your opportunity. But that's just my take, we'll see. Or, we reject these levels pretty hard and we start breaking down. So let's see what happens. But if we can't break this trend or break this downtrend or even test it, the next spot, or at least downside to watch, would be around this 390 on SPY. Let me draw the zone in. That's this area right here. It's pretty much where we held a higher low back on the 17th of November. If we break below that level 390, then okay, now we can talk about, downside, but obviously it's still $10 or $12 to go. We could reject and there's still a good opportunity there. But again, you kind of have higher lows on the daily until that breaks. So, below that 390, then you're looking at pops to play short, ideally for even swings or for whatever. For somewhat of a bias, just based off of price action bias after the price action tells us, hey, we look pretty weak. But we'll see. Long with Boyle, short nat gas with cold, go long with Boyle. Yeah, Boyle was the one I forgot. Boyle. So you'd go long Boyle, ideally, on nat gas. I would say puts on cold, or you go boil longs, right? Boil longs. I have written down somewhere, but I didn't off the top of my head. Didn't have it right there, but Boyle, yeah. So yeah, that's an idea. You can go even to shares. Boyle's got it. I mean, yeah, you definitely could go shares. Boyle's pretty nice. I mean, if Boyle holds around, I would say I would just play off nat gas holding 7. But if Boyle can hold up, upper and mid upper 40s, good. And there's your risk. So you're not going to risk too much. You got a little bit ahead of yourself if you play it long, there, but could be a good opportunity there coming up on Boyle. OPEC meeting next week. That's good stuff to keep in mind. In terms of what's going on next week, let's just mention that really quick. Tomorrow, we have Mr. Bullard and then the New York Fed, John Williams. Who cares? But you got these two guys speaking tomorrow at noon. I don't really think you're going to get too much movement from them, but you'll see there'll be headlines, I'm going to guess. You got some home stuff coming out on Tuesday, some home numbers and consumer confidence on Tuesday as well. Not massive movers. Wednesday is your big day. Chicago PMI, job openings, quits. You got some Fed speakers. You got Powell speaking as well. GDP revisions. Not that should move us, because the GDP revisions are just kind of they shouldn't be big revisions. It should be a tenth or 2%. It shouldn't be massive. So that's the deal. And then you got jobless claims and some job numbers and PCE numbers and manufacturing numbers coming in on Thursday. Thursday's a lot. We're backloaded, really. Non-farm payrolls, unemployment rate coming in, and labor force participation coming in on Friday. So you're backloaded this week. So you got some opportunity, I think, for things to be a little quiet Monday, Tuesday, but then come Wednesday, things pick up pretty big. And again, this is economic data. It'll be the story in the morning, and then the market will react, and how the market reacts is how we'll get there is what you want to be paying attention to by the end of these days, off of how there's just will be some chop, some volatility in the mornings, and then you'll get a better reaction ideally by the end of the day. So that's what we're looking at for this coming week. Outside of that, we talked about Hyatt, we talked about ET, we talked about Enphase. Let's start looking through some other names. We'll talk about AMD and NVIDIA here. AMD, really quick, higher lows here at $70. You want to see it hold 70 on the big picture. In the meantime, though, you got these 2 wicks up here. You're kind of overextended in my view. I would like to see pullbacks. If not, though, we start breaking out, we keep going. AMD up to the mid 80s is going to be kind of my view, because you got a gap to fill on the upside right here. Let me just add the gap indicator. By the way, TradingView has this new gap indicator. So target on AMD would be this spot right here. If we keep going up around 83, 84, and then downside for sure, looking at $70 first, and then below that, I think 63 will be a next key spot. It was a gap fill and also was a pretty key inflection point right here. When we broke out over here, we had a big move up. So 63 or so will be key on AMD. That's my look at it. NVIDIA, let's see. NVIDIA, we got a gap down on NVIDIA. If it wants to come down and it breaks this trend line, I'm watching this pretty closely. It's a pretty aggressive trend line. So, I'm watching it kind of close. If it breaks down below, 160s, down back mid 150s, then maybe we have some potential opportunity back down to the 140s on NVIDIA. But if it keeps pushing, we got resistance up around 190 on NVIDIA. Pretty strong resistance up around 190, I would think, on NVIDIA going forward. Home Depot has been a strong one. Obviously, it's a pretty heavy weight in the Dow. So she's been pretty strong. She had a nice push on Friday. Higher lows continuing. When this higher low trend breaks, you got opportunity here. So maybe this is your look for, I can zoom this in even better so you get a better view. Let's see. Let's bring this bad boy in a little bit. Let me get rid of the gaps. The gap indicator is cool, but I don't like looking at it on short-term time frames once you zoom out, or once you start to zoom this guy in. So yeah, here's my look on Home Depot. Let's see if it holds this area, but this is going to be kind of your spot right here. Of support, 315 support, 325 or above that now, and it looks like if it wants to keep going, you got room. Next key spot will be up here towards 332. That was your high from, I'll just draw a line there. That was your high back in August, mid-August on that rally. But you got more room. If you get above 335, 340 here, look at the volume, guys, on Home Depot. There's not much. So if the Dow continues to stay strong, we could have a nice mover here, continuation. There'll be pullbacks along the way, but generally that's the trend and we could be headed to the upside. A little small gap to fill up in here on Home Depot, up towards about 345 or so. So we'll be watching those areas on HD. But I do kind of like that. Walmart, here's another one. Walmart, super strong, really strong, right? Let's see what happens here. But again, I think someone mentioned it last week on the stream, if I'm not mistaken, or somewhere. The problem with retail names, right, is going to be if this recession into next year is actually pretty bad and people are not spending tons of money, there could be some good downside opportunities on stocks like Walmart. Let's take a look at the big picture on Walmart, right? If you zoom out Walmart, here's the 5-year chart. What do you see? You're right up at resistance, outside of this little push we have back here in April of this year. You're right up at resistance of the past of 2020, 2021. So let's see how this reacts. I don't think it's worth blindly shorting this stuff, right? Because you could get squeezed out. But let's see how it reacts here. And if it does kind of like something like this and starts to fade back off, this could be a better entry on the short side, risking that high, for a better short trade or a swing trade back down. Like that's how you want to look at it. So it's in kind of explosive mode. It's, a decent weight in the Dow, if I'm not mistaken. So, it's doing pretty well right now, but that may change into next year and we'll have to see. Pull up a TGT, pull up a target as well. Still getting over a little cold. Target, look at this. I mean, if you ask me what I see on Target, I see a bear flag on the weekly. So I'm looking at Target and I'm saying to myself, okay, this is going to take time to play out, right? No guarantees that this ends up panning out, right, in the next 2-3 months. Like, who cares, right? But Target is pretty weak. Target has got resistance up here in the 180s. It's sitting in the 160, so it's kind of right in between. But you could be looking at this and saying, hey, I want to start to look to risk this level on Target, and I'm looking for continuation to the downside. I don't know how far. Maybe you want to risk it down, or you want to play it down to this volume, 130 zone right here where the volume picks back up. You got some better volume support, so maybe you're looking for that. So let's do it. Let's draw a trade idea from here. Risk up over those highs, which would be up around let's say you risk 185, targeting 130. That's not the best risk reward right now. It's about a 1.6 to 1. We could probably do better if the market pushes higher. You can get a better entry and maybe have a better opportunity, but that's something I would be looking at on Target. Big picture, big picture bear flag here, as you get a big move down. Earnings were involved, I believe, and then at some point this year, and then now you're kind of just consolidating. You're struggling to get back up. You're not showing the same strength as you are on Walmart. And now looking weak. And if we do break this trend, you could just play it for even just watch it for a day trade opportunity. But if this trend breaks, oh my, this could be a good opportunity for the downside for a nice continuation if the market cooperates. Again, that's big if, but that's the kind of the look that I'm thinking on the Target chart. So that's the deal. Let's see. Running through ES rejecting. Let's go back to the futures and take a look at futures. Yeah, they're kind of chilling at this down 0.4, 0.45 or so. For now, we can wake up tomorrow morning and go, oh shoot, now we're up. Like, for all we know, could be a complete reversal. I don't think this 200 moving average short will be easy on SPY. That's my take too. Could be wrong, right? Could just be as easy as like simply playing the rejection and hey, we get a big move. It might be an intraday opportunity when we do test it. If we do test it, we're close. Could happen tomorrow or this week. But that's my take as well. I think it's going to be a little bit, the same signs are not there. Look at the dollar, look at bonds, look at inflation numbers, and let's just pull it up, right? Let's see if I can get this. U.S. inflation rate, it's this site right here. Tradingeconomics.com is the one that I like to look at. It's pretty big. Let me just make it a little bit smaller. So here's the thing. And, again, right, Powell's come on and he said that we don't see a true trend in inflation. And that was before these October numbers came in. Okay, fair enough. But like I said before, you want to listen to Powell, you're going to be behind the 8 ball anyway, right? That's just how it's been the past 2-3 years. So who cares? Who cares? Like, that's just what you got to understand. What do you see? He comes in and says, I don't see a clear trend in inflation. Well, before he said that, what do I see? I see a 9.1, okay, back here in June. This is June. I see an 8.5 in July. I see an 8.3 the next month, 8.2 and a 7.7. What I see is a clear trend reversal from uptrending the prior 6 to 8 months to now the next 6 or 4 to 6 months we're downtrending. That's what I see. So we've got a pretty clear trend of downside in inflation, which is why I don't think that high CPI inflation rate trade is going to be as strong. Obviously, if we wake up and get a smashing 8.6 out of nowhere next month, market will crap its pants and we'll be down at low, or be headed lower very, very fast. NASDAQ probably goes to new lows very shortly after, but the chance of that happening are probably pretty low. Again, when you look over at oil, right, oil's not helping the case to send CPI higher. If oil was holding up and oil was doing what people thought it was going to do 2-3 weeks ago and not reject, then maybe you have a case. But guess what? Oil's going to lows. Gas is coming down. You look around, right, and you're saying to yourself the inflation trade is not the same. I'll pull up the sentiment survey. I want to pull up AAA gas prices really quick and just get a feel. I mean, by me, I'm seeing you can get it. I just paid $2.97 a couple of days ago. I mean, you can get it now sub 3, and that's Texas though. So average here is $2.89 now. So it's coming down a lot, but it's here. It's not everywhere, but the average is $3.55. The current average is that level. Yesterday we were down a couple cents. A week ago, we're down 10 cents on a week. We're down 20 cents on the month. In terms of gas prices, we're coming back down. So gas coming down, oil going down. Let's go back to oil really quick here. Oil looks pretty nasty if you ask me. Here it is. Here's the daily. This does not look good. This looks pretty weak. This looks like we're going to short that. We want to short this thing back down into the low 70s next. That's what it looks like. We're testing this. We could, of course, catch a bid here at the recent or the low from September, but wouldn't be surprised if we break down below this. So oil looks weak. If that continues, then that's only going to help the case I don't want to say the bull or bear case, because again, there's other problems that are going to be the ultimate drivers. But in terms of that inflation case, that's what you're looking at. Now, again, check this out. If you were to look at this inflation data, let's go back to, if I go back to 01, let's just go back to 0101. Let's see if I can do that. How do these charts look? There you go. Look at that. Okay. So here's a good look of inflation. So when we look at CPI, we're calculating the year over year increase. So whatever happened, we're not comparing ourselves now to, July of 2021. We're comparing ourselves to a year ago. And that continues, that line continues to move, right, as time goes on. So my bad, I wasn't as excited about last CPI. I was away first off, but the second thing was I didn't zoom this chart out far enough to see this, but I wish I could draw on this. But we had these 5.4s pretty much from late spring into early summer and early into late summer, all of summer of last year, right? We had 5.4, 5.4, 5.3, 5.4. Then the October 2021, we have a bump from 5.4 to 6.2. That's a pretty big increase, right? In terms of month over month, right? On that. That was this past CPI. Now, projections, of course, I would imagine they take this stuff into account. Okay, so it is what it is. But we came in low. And so looking back, I probably should have been a little more excited or a little more interested, I would say, in this CPI, this past one, than I really was. But now from here, we got a 0.8 increase from that month to this month. Now you got a 0.6, then you got a 0.2, then you got a 0.5, then you got a 0.4. So these increases start to get pretty substantial, or they are substantial. They're not 0.1 or whatever. They're pretty big for the next 6 months, even more, right? So you've got time for us to lap over these big increases. And as we lap them, that's going to bring our numbers down a little bit by default. And not to mention, as prices start to come down and we're seeing oil coming down, that's helping. And then if we're looking around and you're saying to yourself, well, all these companies, all these big retailers, Walmart, Targets, whatever, Best Buys, as an example, are looking at massive inventory come end of holiday season. Guess what? They're going to have to discount prices a lot more because they got a ton of crap that they got to get rid of, and they bought too much and no one bought it, right? So you're going to see prices come down even more. That's the true, if you're looking ahead, that's what you're looking at. You're not, that's where you got to be keeping your eyes at. This is not the reason why we're going to go down. CPI is no longer the reason the market's going to go down. That's over. That's past. It's now CPI caused the Fed to react in a certain way, and it's now how bad is the economy going to take that Fed reaction. That's my view. Big picture, macro view, and it doesn't happen tomorrow just because you're looking at this, oh, that means they're bullish. Like, no, not necessarily, There could be a window here where the market's like, oh, hey, CPI's coming down. We're looking pretty good, right? And then, oh, shit, next year, oh, we're not looking good. We got deflation. Companies are getting destroyed. People are getting laid off left and right. Unemployment's, flying up. Like, that's the concern that you could see next year that maybe no one necessarily sees coming right now, or not as many see coming right now, because you still got people who are saying, hey, we can avoid a recession. And maybe we can. But, we're not going to know until obviously into next year. So that's my take on the whole situation with inflation numbers and all that stuff. But right now on futures, we're down 0.43 on the S&P. We're down 0.55 on the NASDAQ and 0.47 on the Russell. Not massive. It opened, they gapped down and they're kind of gliding lower, but that's the deal. Beach bum talking about free pina coladas at the beach. Yeah, I would be down for that. Momentum may shift to recent reverse splits. That's been pretty hot. Tops had an interesting price action on Friday. Reverse split names have been pretty this year, at least from the past. They have had their ups and downs. Ideally done trading and dealing on the beach by 2. That's the life, man. That's the way to do it. The beach portfolio, right? Luis from New York City is in the house. Thoughts on TCD? Yeah, let's take a peek. And I do want to wrap things up a little bit because I do got to watch my Eagles in a bit. I got to eat dinner too. Got to make someone to eat and watch my Eagles. Okay, this is interesting because I'm not a fan. I'm not a fan. I don't know the story behind it though, so I'm not a fan of just what I see right now. However, some action. There's some let's pull a volume up on this guy really quick. There's been some volume the past 2 trading sessions. So if you want to say that volume is interesting and maybe a bottom is in, well, then your risk is like 19 cents or so. Risk those lows, which really is not that bad of a risk from here. Your upside could be substantial here, like big time upside, talking 30 cents plus. So I like that as a potential trade. Just respect the trade, right? Don't hold this for months and months and months and let it bleed to 6 cents and 5 cents, and whatever. If that volume is telling and you want to play off of, hey, I think I see something going on here. Hey, there's been some volume. That's kind of weird. I'm going to risk it versus those lows. Then do it, right? And that's the trade. And then your targets ideally are going to be higher. So let's say we do that. Let's just bring this bad boy in. Why is this thing all weird? Come on. Don't do me like that. Okay, here we go. So you bring it in and you're risking down to about 19 cents. A 2-to-1 risk reward. I mean, you're talking about on small cap trades like this, your risk rewards on swings are generally a lot more than 2-to-1. But the top of the recent range, would be about a 6-to-1, which is incredible as it is, up to about 29 cents or so. So that could be a beautiful trade if you ask me. But if this breaks down and this doesn't hold 19 cents, keep it on the radar because it's got a massive fat gap up potentially. You're a super cheap name. If things heat up late December into January and these cheapies, these micro pennies, as we say, heat up, you are going to have a beautiful bottomed out massive gap to fill. Obviously, these gaps are huge. Don't guarantee they're going to fill, but you've got the potential there. And so you have a potential swing trade if you can then risk, base it off of recent price action and risk and play it. Like that's how I would look at that on TCDA. So that's kind of how I played or how I'm playing Grill. I've been watching Grill for months. I was in, was out, back in, and saw the recent volume has kind of got my attention. It fell below this 33, down to 30 cents. Now it's got some volume catching it. So my risk is 30 cents. And I have an average at like 34.50 or something like that, or 34.5, not 30, just under 35. So my risk on this, and I'm targeting 50 cents as my first target, is, in my view, it's pretty good risk reward. Let me just adjust this thing because I don't know why that gets so wonky. But let's see. Put this guy back into where my average is, like roughly, and I'm risking to a new low on the year, and I'm targeting 50 cents. That's a 3-to-1 on my risk reward there. But it's the same idea, right? You get a bottomed out chart, wait for a trigger. What's the trigger? In this case, we got a push to new lows, and all of a sudden volume comes in, flushes out, hits some stop losses. Again, could we be wrong? Yeah. But the thesis is here. Hey, it flushed it, hit some stops, Now volume comes in, bigger money is accumulating, and we have a run maybe in store very soon. So that's the swing. And also, making sure they have until end of January to regain NASDAQ compliance. So we got time. We're not at risk of delisting just yet. We got time. And they have like $11 million of cash. Like they've got some cash. Like they're not screwed. They're kind of okay. In terms of small cap. That's all you need because these things don't go off fundamentals. Of course, long term, yes, but short term, no, they don't. So that's my take on it. Tops have been one of the worst stocks in this market. Yeah, Tops is a funny one. I can't believe it's still around, to be honest with you. But they always come back. They always reverse split and whatever. But yeah, down to those lows. Caught some volume on Friday. It looks like some relative. It's caught 500, almost 600K shares versus it was trading sub 200,000 shares for a while. Back before split, have a pop off the split. Now it's going to try to hold some support here. I wouldn't be surprised if it breaks this level, but if it holds this like 220 area, cool on Tops. But it's trash long term. Like it's a good short when the momentum dies. It's a good short. It's probably expensive to short, fees and whatever, but hard to borrow rates and stuff. But it's been dog crap essentially for a long time. Every once in a while they want, and that's the thing for those who are not aware, not big into small cap trading. It does. We look at this stuff and there's times of years or there's opportunities, there's periods of opportunity where like these things get pumped and they can go, crazy percentage points, in a very short period of time on these pumps. Obviously there's, a decent chunk of change made back on the short side as well. And they're not good long-term holds, but if you, have a reason or a trigger or a strategy to time it and play off the timing, there's a lot of money to be made on these things. This has been a tough time to swing, obviously, but selectively it's been good depending upon where you've been. You just got to have a strategy and know what you're doing. All right. Let's see. When real estate gets back to 3%, you should own an Airbnb, or if you're a baller, have the cash buying. Yeah, on the beach, dude, that would be nice. Buy our own island rather than a Lambo. Yeah, that's the way to do it. Who needs a Lambo when you're on an island? Right? All right, so I'm going to wrap things up here and going to go eat something. But futures-wise, just cracked down to new lows a second ago on futures. We're down about 0.48%, not massive, but we are down on the S&P. NASDAQ futures are down 0.67%. And that's where we're kind of sitting right now across the board. And if I'm bullish on the next couple of days, like I would want to see pullbacks at the open. I want to see gap downs get bought up. We'll see if that happens tomorrow. Tomorrow and Tuesday will probably be pretty interesting days. Then we got Powell speaking late on Wednesday. And some more economic data coming out Wednesday. So that's where things get a little more interesting. But with that said, I'm going to wrap things up. Make sure you guys thumbs up button on the way out. I appreciate it like always. We will do a live stream Monday, Wednesday, Friday for Power Hour. And then, of course, next Sunday like usual. That is the plan. And we've got a channel sponsor coming up. So that can be kind of cool. Hopefully they're someone that you can find some use in if you want to, of course. But that's the plan for this upcoming week. So thanks so much for watching. And I will see you guys tomorrow. Peace.